the last 8 to 10 weeks, there has been very weird, very unusual policies out of China concerning their economy. Now, for the last couple quarters, credit has been dropping very quickly in China, and there's actually been a record amount, as you can see there on your screen, of corporate bond defaults. Now, what is most surprising is that the increasing amount of corporate bond defaults in China are from Chinese state-owned enterprises. So these are companies that are explicitly backed by the Chinese government. So it is very interesting that they're allowing their state-owned enterprises to default on bonds. It's tough to say exactly why they're allowing this, because in the past, normally they wouldn't have. And China has been running enormous trade surpluses as they came back online and gained market share for global manufacturing within 4 or 5 months after the pandemic started. So there's a lot of crazy policies coming out of China, whether that is with the Hong Kong stock market, their index, the Hang Seng, which was dropping about 8% per day at one point, and the Chinese government was allowing this to happen, which is very unusual. There's been interventions in the past into stocks in China as well. And then also you have draconian policies that have been coming out within the last 8 weeks concerning commodities prices, especially base metal prices, where Chinese government officials have tried to implement just really weird commodities price controls, specifically on base metals. But also there's been articles coming out from Bloomberg and elsewhere talking about how on the Shanghai Metals Exchange, there was attempts to put enormous bids below the market price to try to crash prices that way too. Now, obviously that hasn't worked, as there's been rallies in the copper price. The copper price was briefly down, but you've had base metal rallies. So just very unusual policies overall. Also, the other thing that is really interesting going on behind the scenes has to do with Evergrande and Huarong Bank, which is a distressed debt asset management company that also finances a lot of Chinese corporate bonds. And they're heavily connected, along with a lot of other Chinese banks, to China's largest real estate developer, Evergrande. So the Evergrande is having a lot of financial problems. I'll cover that in a separate video. There's actually a super long Twitter thread that came out in the last couple weeks from a anonymous money manager. He just posted an enormously long Twitter thread about Evergrande, laying out the case for all the problems that Evergrande has been having lately, how they're doing all these pre-sales, collecting all these pre-sales for luxury condos and single family homes, and then they're not building them, and that a lot of local Chinese government officials are starting to stop Evergrande from being able to collect the cash on these pre-sale payments because they're not actually doing the building. And so Evergrande is having enormous problems with debt on their balance sheet. There's so much, their balance sheet is really a mystery. It's just a mess, total mess. So I'll cover that in a separate video. But the bottom line is that you're having Chinese government officials actually allow Chinese state-owned enterprises to default on bonds. And as you can see there with the chart on your screen, and I'll attach a couple articles below this in the information and description section if you want to read more about this, that there's record amounts of bond defaults in China. And shockingly, the majority of them, I think over 50% of them, are from Chinese state-owned enterprises. So this is unusual compared to the past. It is very surprising because in the past, the Chinese government would not have allowed Chinese state-owned enterprises to actually fail. Remember, prior to the pandemic, we had in 2019, early to mid 2019, problems with a lot of Chinese banks like Baoshang Bank and some of the other Chinese banks, and a lot of those were swept under the rug. When a lot of those problems in the Chinese banking system, where a couple Chinese banks were either bailed out by the People's Bank of China or by sovereign wealth funds of China, and then the rest of the problems were swept under the rug, at least temporarily. But now that Chinese corporations have continued to borrow more, and they picked up their borrowings in dollar-denominated debt again within a couple months after the pandemic started. So by May, June, July of 2020, the amount of dollar-denominated debt borrowing by corporations inside mainland China had started to rapidly increase again, betting on a weak dollar, and because interest rates to borrow in dollars, it was cheaper borrowing costs. If the dollar does rally, that's going to cause enormous amounts of problems too. So comment below the video why you think the Chinese government is actually allowing some Chinese state-owned enterprises to default on their corporate bonds. This is pretty surprising to me because in the past, this was not normal policy in China. Finally, if you like content like this and want to help keep content like this free so it doesn't all end up behind a paywall, or you want far more in-depth content, research, financial education, and analysis than I provide in these short little free videos, there is over 170, I think almost 180 now, articles, charts, and audio podcasts behind the paywall exclusively for patrons, including 22 new articles out in the last 9 or so weeks. The latest article that just came out a couple days ago is about why the silver price over the next 5 to 7 years will have a much higher price floor, probably around $35 to $40 an ounce in the not too distant future, a couple years from now minimum, because the silver grades, and I show this, the silver grades in less than a decade for a lot of primary silver miners, and I actually did the research, went back through a bunch of old documents, and found the average grades mined for one of the largest silver miners on the planet, they are down enormously. So if you want to see the product of my research going back through 2013 and 2014 annual reports, and then comparing it with what the average silver grades mined last year in 2020 were in 2020's annual report, you can take a look behind the paywall for only $5 a month. There is a lot of good research there on global macro companies and sectors, on gold mining, silver mining, what higher oil costs are doing to some of the gold miners. There's a few gold miners out there, some of the better run ones that hedged the oil costs when they were cheaper, so they're protected, and they have not raised their cost guidance yet for the rest of 2021. So that is a good sign for some of these gold miners. So if you're interested in that, it's only $5 a month. I charge less than anyone else for premium content. It is the cost of a Starbucks cup of coffee per month. So for those of you who say you can't afford it, I'm going to be very skeptical about that because it's the cost of a Starbucks cup of coffee, and you could always cancel if you don't like it, but I think you're really going to like it. So if I could wrap up this short little video, we are seeing very surprising policy decisions from China. They tried to sabotage base metal prices, and they're still threatening to actually dump base metals onto the market, some of their reserves and stockpiles. However, that hasn't really worked that much. The copper price did correct, but now it's starting to rally. And now we're starting to see this news out about record bond defaults, but it's not from fully private Chinese companies. Shockingly, it's from Chinese state-owned enterprises, which are actually backed by the Chinese government, which have a lot of contracts with other Chinese state-owned enterprises and directly with the Chinese government. And these are the companies that are actually defaulting the most on their corporate bonds in 2021. So we'll see if this trend continues. We'll see if the Chinese government doesn't do a 180 and reverse course and start doing bailouts again, because that has been the case over the past, especially with the Chinese banking system in 2019, and I covered that extensively in the videos. But if the Chinese economy is going to slow down enormously, that will probably spill over into US stocks, especially a lot of large corporations that do a lot of business outside the United States, and that's going to hurt their shares. But a lot of it is dependent on what the Fed decides to do. If the Fed actually does decide to try to raise interest rates even a quarter point, or does at least try to taper a little bit, then that would, along with the slowdown in China, along with credit being pulled out of China, cause a stock market crash in the not too distant future.